Most people think Delta as seats and schedules. Fair, but the more interesting story is why the company looks steadier than an airline usually should. In an industry famous for razor-thin margins and frequent bankruptcies, Delta stands out. Airlines live with fuel spikes, bad weather, labor cycles, and demand swings, yet Delta tends to hold up better than peers. This isn't luck. It's a mix of reliable operations, fortress hubs like Atlanta, products business travelers actually pay for, and something less visible that shows up more in the cash flows than in the cabin. We'll come back to that. So the real question is, how does a business that is exposed to constant shocks keep generating real, repeatable value? The answer isn't in any single route or fare. It's in how certain dollars keep arriving, even when planes are a little less full, and how the network quietly nudges customers back into Delta's ecosystem. Enough teasing, let's get into how Delta makes money. Delta is not just moving travelers from Atlanta to Los Angeles. It's running a diversified revenue engine that combines passenger tickets with loyalty programs, cargo operations, and even aircraft maintenance for other airlines. The company's revenue model is more diversified than the average airlines. Passenger tickets remain the core, accounting for roughly 70 to 75% of revenue, but the real story is how the company layers additional streams on top. The first is its SkyMiles loyalty program, which has become one of the most valuable assets in the airline industry. Through its partnership with American Express, Delta sells billions of dollars worth of miles every year. In 2024, the Amex partnership alone contributed more than $7.4 billion in high-margin revenue, income that flows regardless of whether passengers actually redeem those miles. The second is premium passenger services. Delta has invested heavily in products like Delta One Suites, Comfort Plus, and upgraded lounges. These attract corporate customers and premium vacation travelers, producing significantly higher yields per seat than economy fares. The third is ancillary fees, from checked bags and seat upgrades to Wi-Fi and onboard sales. These generate hundreds of millions annually at very high margins from customers willing to spend on comfort. Beyond passengers, Delta also earns from cargo operations and Delta Tech Ops, one of the world's largest aircraft maintenance divisions, which services not only Delta's fleet but also aircraft from other airlines and governments. The result is a model designed to smooth volatility. When leisure traffic slows, corporate travel and loyalty revenue can support earnings. When international markets weaken, domestic hubs still generate cash. By balancing ticket sales with loyalty economics, maintenance services, and ancillary fees, Delta has built an airline business that behaves more like a diversified services company than a pure transportation provider. Delta's financials reveal why it's often seen as one of the strongest of the US Big Three carriers. In 2024, the airline generated approximately $62 billion in operating revenue, reflecting the recovery of both business and leisure travel after the pandemic slump. Operating margins typically range from 10 to 12% in strong years, well above the airline industry's historical average of 5 to 7%. Net income reached $3.5 billion in 2024, a remarkable turnaround from the deep losses during the COVID-19 crisis. Importantly, free cash flow has been sufficient to begin paying down the debt taken during the pandemic, which at its peak had ballooned to past $20 billion. Delta also reinstated its dividend in 2023, signaling management's confidence in cash flow durability. Return on invested capital often lands in the low to mid-teens, consistently ahead of peers like American Airlines and United. The loyalty program provides a stabilizing effect, delivering steady, high-margin revenue that supports profitability even in weaker travel cycles. If you're new around here, make sure to subscribe and tap the bell so that you don't miss the rest of this series. And drop a like if you're finding this interesting so far. Delta competes on several fronts. Domestically, its fiercest rivals are American Airlines and United Airlines, both of which operate massive hub and spoke networks and chase the same lucrative corporate contracts. Among the three, Delta has earned reputation for stronger operational reliability and customer service, which translates into higher yields and repeat business. At the lower end of the market, Delta faces constant price pressure from low-cost carriers like Southwest, JetBlue, and Spirit Airlines. Delta cannot match their bare-bones fares, but it differentiates through tiered products: Basic Economy for budget travelers, Comfort Plus for upselling, and Delta One for premium flyers. This segmentation helps defend market share without collapsing margins. Internationally, Delta competes with global giants like Lufthansa, British Airways, Air France-KLM, and the Gulf carriers such as Emirates, Qatar Airways, and Etihad, especially on long-haul premium routes. Its joint ventures with Air France KLM, Virgin Atlantic, and Korean Air extend network reach, allowing Delta to offer seamless service across the Atlantic and Pacific without flying every route itself. Delta's market position is reinforced by fortress hubs, particularly Atlanta, the world's busiest airport. These hubs act as revenue engines, funneling traffic efficiently and giving the airline a scale advantage that is difficult for rivals to replicate. But for all its strengths, Delta remains exposed to the inherent turbulence of aviation. The most immediate risk is fuel price volatility. Jet fuel often represents 10 to 25% of operating costs, and sudden spikes can compress margins quickly. Delta hedges less aggressively than some rivals, leaving it reliant on operational discipline and pricing power to offset cost swings. Labor costs are another challenge. Delta's workforce, including pilots and mechanics, have secured significant pay increases in the recent contracts. With labor already accounting for about a quarter of operating expenses, further hikes could squeeze profitability if revenue growth slows. The business is also highly sensitive to macroeconomic conditions. Recessions or demand shocks such as pandemics or geopolitical events can sharply reduce traffic. Business travel, one of Delta's most profitable segments, is especially vulnerable to long-term structural changes like virtual meetings. On the competitive front, low-cost carriers continue to undercut pricing on domestic leisure routes, while state-backed international carriers raise the bar for long-haul premium service. Delta must invest constantly in product upgrades and customer experience to maintain its premium edge. Delta's future will be defined by its ability to adapt to a changing aviation landscape where technology, sustainability, and shifting consumer expectations all collide. The most optimistic scenario sees Delta doubling down on premium services and digital transformation. Investments in AI-driven scheduling, biometric boarding, and predictive maintenance could reduce delays, cut costs, and improve the customer experience. Pair that with continued expansion of Delta One suites and upgraded lounges, and Delta cements its status as the business traveler's airline of choice. The loyalty program remains a growth engine. SkyMiles and the American Express partnership could expand into a broader lifestyle ecosystem, extending Delta's brand beyond flights into retail and financial services. With billions in recurring revenue already, this business may become as strategically important as the airline itself. On the sustainability front, Delta has pledged billions towards reducing emissions, investing in sustainable aviation fuel, fleet modernization, and carbon reduction initiatives. While the upfront costs are steep, leadership in green aviation could strengthen its corporate client base as companies increasingly select travel partners aligned with ESG commitments. If the next decade belongs to airlines that could blend efficiency with sustainability and customer loyalty, Delta is well positioned to remain a leader. Its model shows that even in an industry known for turbulence, it is possible to fly higher and more profitable, not by avoiding headwinds, but by building the engine strong enough to push through them. Thank you for watching this episode of S&P 500 in 500 seconds. Tap like and subscribe now so that you're first in line for our next breakdown of Celanese. It's dropping next week.